Welcome to Cat Eye US Stock. We watch markets with calm focus and sharp instincts. Friday, February 20th, 2026. Stocks closed higher, but it didn't feel like a victory lap. The Supreme Court knocked down a major batch of tariffs, exactly the kind of headline that can light a fire under equities, and yet the tape still felt cautious. Megacap tech and growth did the pushing, but participation stayed uneven. So the big theme, relief, with conditions attached. On the S&P 500 Heatmap, it was green but not clean. You had a wide spread of moderate greens across the growth-heavy pockets, and the megacaps did a lot of the heavy lifting. But you could also see the stress points. Energy showed up as a clear red pocket, and inside tech, a couple of deep red single-name air pockets kept the rally from feeling one way. That heat map turned into a pretty specific money flow story. Capital rotated toward what you could call policy relief plus growth beta. Communication services, technology, consumer discretionary, they led the move. Financials being mostly green mattered too. It made the day feel like real risk appetite, not just hiding in one corner. But there was a very clear loser, energy. So yes, the index was up, but the market was still making choices. Here's why the session felt weird. The Supreme Court decision gave the market a burst of relief, but traders didn't treat it like the end of the story. Tariff rhetoric picked back up out of Washington, and that kept the headline risk feeling very alive. The result? A tug of war. Buyers leaning into relief, sellers leaning into uncertainty. You could see the split personality, Nasdaq leadership, Russell hesitation. A rally? Yes. Conviction? Not exactly. The chatter today wasn't about a clean reset. It was about what comes next, the big unverified story on desks. Even if the court trims some tariffs, the administration could try other channels. That idea kept traders from treating this as a permanent all clear. And in a tape like that, single-name pressure tends to get amplified because when conviction is shaky, rumors and positioning can matter more than fundamentals, at least for a few hours. The Supreme Court struck down a major batch of Trump-era tariffs, but markets quickly realized this wasn't full relief. Yes, the court ruled that tariffs imposed under emergency powers went too far, but tariffs under Section 232, the National Security Clause, are still firmly in place. That means 25% tariffs on foreign autos are still here. Steel and aluminum, now at 50%, certain semiconductors and chip equipment, still facing 25%, furniture imports, also locked at 25% and set to rise. So while the headlines screamed tariff defeat, the reality was a lot more complicated. Automakers like Ford, GM, Mercedes, and Nissan are still absorbing billions in tariff costs. Steel-heavy industries and appliance makers remain under pressure, and semiconductor supply chains aren't getting a break. The market reaction today reflected that nuance. Initial optimism faded as traders realized this ruling trims the edges. It doesn't dismantle the core trade wall. And with the White House already signaling new tariff pathways, uncertainty isn't gone, it's evolving. This isn't a clean policy pivot, it's a recalibration. For investors, the message is simple. Tariff exposure still matters, sector by sector, and until the policy picture really clears, supply chains and earnings guidance stay vulnerable. Relief rally? Maybe. Structural reset? Not yet. Alphabet GOOGL was one of the clearest generals on the day, up about 4%. In a session driven by tariff headlines and uncertainty, that kind of move mattered because it provided real index lift and helped keep the Nasdaq in the lead. It also reinforced the rotation. When the market gets even a little policy relief, money can sprint right back into liquid growth-heavy leaders. Exxon, XOM, dropped about 2.4%, even as the major indexes closed higher. That's why energy read like the market's red flag today. The weakness was concentrated, but it was obvious on the board. The takeaway isn't a single headline, it's the character of the tape. Buyers showed up, but they didn't buy everything. Akamai, AKAM, was the clean example of stock-specific pain, down around 11%. From the input set, it sold off after earnings despite a beat, tied to a softer 2026 outlook and higher Capex expectations, pressuring margins. In a market that's willing to buy AI and growth, this is the other side of the coin. If the forward margin story gets cloudy, the tape can be ruthless. Oracle, ORCL, was one of those deep red tech spots, down about 5.4%. The move mattered because it came inside an otherwise constructive tech session. Now, the exact catalyst wasn't confirmed in the provided sources for this sweep, so that part stays speculative. But the market message is still clear. Even on a risk-on day, single-name liquidation can show up fast. Nvidia was up about 1%. Not a fireworks number, but in a headline-driven session, it's a tell. It said the AI complex wasn't being unwound while traders digested the tariff news and the uncertainty around it. It fit the day's overall vibe: selective leadership, controlled buying. Taiwan semiconductor TSM was up about 2.8%. That matters because it broadens the leadership beyond just US megacaps. When TSM participates, it can read as healthier risk appetite across the semiconductor supply chain. It didn't erase the day's divergences, but it did add confirmation that the tech bid wasn't just one or two names. Looking ahead to next week, the setup is pretty straightforward. This market is trading the policy narrative in real time, and headline risk can stay elevated. On the calendar from the provided schedule, Monday morning, FOMC member Waller speaks. Tuesday brings consumer confidence in the morning, and President Trump speaks Tuesday night. Later in the week, we get unemployment claims, then PPI on Friday. No predictions, just the posture. After a selective, conditional rally, the question is whether participation broadens or we snap right back to narrow leadership on the next policy turn. So that's the real wrap on Friday. Stocks rallied, but it wasn't a full resolution day. The mega caps did the work, small caps didn't really confirm, and energy stayed a pressure point. And on tariffs, the message wasn't problem solved. It was rules changing. Into the next session, watch two things. Does breadth improve, and how fast does the tape react to the next headline? Thank you for watching Cat Eye US Stock. Stay curious, stay calm, and we'll see you next time.